Hey folks, what's going on? It's Wilson. I'm back with another quick video on the difference between trailing stop loss versus putting a stop loss limit order. We're looking at Alibaba stock right now, which I was trading about 2 weeks ago. And this is a stock that I always favor. I've always believed in the company. So I saw that the market was doing really, really well, right? And I remember clearly that I was able to get in, I think it was at around 161. And at that time, the market was performing really, really well. As you can tell, it was on an upward trend. The Chinese market was doing well, but I always enter every single trade with a stop limit order to prevent my losses, right? If I always like to take profits whenever I can, but sometimes it continues to go up, so I always keep changing my limit orders again and again and again. Now I have two options when the stock price started to jump up, right? Actually three options. The first option is I could just sell it, right, and just take my profit, call it a day, never look at the stock again, and that's it. You make your money. But what if it continues to go up and I want to change the limit order, right? And that's what we hope for. We want to gain more money. So there's two more options to prevent your losses when you don't have that much time to just keep looking at the charts every 5 minutes or every single day, especially if you're a swing trader. So the first option is that you can set like a stop limit order, which is what I always prefer to do. The second option is you can do like a trailing stop loss. And the trailing stop loss will follow a certain percentage range so that when it gets to that range, it will execute the order to help you prevent your losses. Now, the problem with that is that, sure, if the stock continues to go up, you will benefit from that. But what if it goes up and then it comes down and then it goes back up? When it goes down and it hits that trailing stop loss, the order will execute and that's it. But you still take profits, so it's still a good thing as long as you're choosing one of them. The difference is that when you're using the stop limit, you can set the price that you're comfortable with taking profits on. So let's say right here, Alibaba jumps to 170, and I see that it's going up to like 172. I can set my stop limit at 170 so that once it hits 170 or lower, the order will execute. And that way I still take my profits because I got in early. If it was a trailing stop loss and it goes down and it starts to go back up, it might take it early and then you're like, let's say it doesn't really, because it's a percentage range. So if it hits that percentage early but then it jumps back up and it's not that price that you want to take the profit on, then you're not making as much money as you could have made, right? So for me, I think it would depend on how much time you have. If you're not too active as a trader and you're more of a swing trader, then always just set limit orders without the trailing stop loss. That's my advice, and that's the way I like to approach it. But it's totally up to you. Just make sure that you always have that risk management strategy in place, and make sure you always enter a trade with some sort of stop limit order to prevent your losses. And always remind yourself that, hey, taking profits is better than not having any profits. I hope this video helped you, and happy trading. Keep investing. I'll be posting more investing videos on almost everything investing related as well as trading related. And have a great day.